The term HODL, which famously originated from a typo of hold in a 2013 Bitcoin forum post, has evolved far beyond its humble beginnings as a crypto meme. Today it represents a legitimate investment strategy that consistently outperforms traditional Wall Street approaches. This analysis explores why HODLing cryptocurrencies, particularly Bitcoin, has proven more effective than conventional trading strategies, and what this means for the future of investing. HODLing represents far more than simply buying and holding cryptocurrency. At its core, it embodies a fundamental shift in investment philosophy, emphasizing long-term value appreciation over short-term trading gains. This strategy is built upon a deep conviction in the technology's long-term potential, coupled with a steadfast resistance to market manipulation. HODLers demonstrate remarkable immunity to emotional trading decisions, maintaining their focus on fundamental value rather than price fluctuations. This approach stems from a profound understanding of cryptocurrency's revolutionary nature and its potential to transform the financial landscape. The psychological advantages of HODLing cannot be overstated. Practitioners experience significantly reduced stress from daily price movements, finding themselves freed from the constant pressure of timing the market. This liberation from continuous market monitoring often leads to better sleep and improved mental health. Perhaps most importantly, HODLers develop stronger emotional resilience during periods of market volatility, enabling them to maintain their positions through turbulent times. Traditional Wall Street strategies heavily rely on market timing, which has proven consistently unreliable over the years. Studies show that over 90% of day traders lose money, primarily due to emotional decisions that lead to buying high and selling low. The impact of transaction fees, tax implications, and the risk of missing the best trading days significantly diminishes potential returns for active traders. In contrast, HODLing maximizes the power of compound growth by capturing the entire market upside while avoiding trading fees and spreads. This approach minimizes taxable events and takes full advantage of long-term capital gains rates. HODLers participate in all price appreciation events, benefiting from the market's natural tendency toward long-term growth. Long-term holding significantly reduces several key risks that plague active traders. HODLers experience lower exposure to short-term volatility and minimize their counterparty risk. By utilizing cold storage solutions, they achieve better security for their assets and gain protection from market manipulation attempts that often target active traders. Examining Bitcoin's historical performance reveals the extraordinary power of HODLing as an investment strategy. Analysis shows that 99.99% of Bitcoin addresses that maintained their holdings for 2 or more years have achieved profitability. Long-term holders have enjoyed average annual returns exceeding 200%, demonstrating superior performance across all 4-year market cycles. This impressive track record has consistently outperformed all traditional asset classes, delivering higher risk-adjusted returns than active trading strategies. When compared to traditional investments, the contrast becomes even more striking. While the S&P 500 historically returns 8 to 10% annually and gold provides 5 to 7%, Bitcoin hodlers have experienced average annual returns exceeding 100%. Even during its worst years, Bitcoin's drawdowns of approximately 60% have been followed by substantial recoveries, leading to an overall return on investment since inception of over 20,000%. The power of HODLing is amplified by the continuously growing network effect of cryptocurrency adoption. As user adoption expands, merchant acceptance increases, and institutional involvement grows, the underlying value proposition strengthens. The maturing ecosystem and developing infrastructure create a positive feedback loop that benefits long-term holders. Technical development further enhances the value proposition for hodlers. As protocols receive upgrades through scaling solutions, privacy enhancements, and security improvements, long-term holders automatically capture the value created by these advancements. The ongoing optimization of network capabilities ensures that patient investors benefit from the cumulative effects of technical progress. Traditional financial markets operate under significant structural constraints that limit their effectiveness compared to cryptocurrency markets. Wall Street's restricted trading hours, reliance on multiple intermediaries, and complex regulatory requirements create friction and inefficiencies that impact returns. The high fees and commissions associated with traditional trading further erode potential profits, while limited accessibility prevents many potential investors from participating fully in the market. Cryptocurrency hodling circumvents these limitations by offering continuous market access, direct asset control, and minimal intermediary involvement. The significantly lower fees and global accessibility of crypto markets democratize investment opportunities, allowing participants from all backgrounds to engage in wealth creation. This removal of traditional barriers represents a fundamental shift in how individuals can participate in financial markets. Successful long-term holding begins with implementing robust security measures. Every hodler must prioritize the use of hardware wallets for secure storage, maintaining multiple backup copies of seed phrases in secure locations. The implementation of multi-signature setups provides an additional layer of protection, while regular security audits ensure the ongoing safety of holdings. Development of comprehensive emergency plans ensures continuity of asset control under any circumstances. Position sizing plays a crucial role in successful hodling strategies. Investors must determine risk-appropriate allocations that allow them to maintain their positions through market volatility. The implementation of dollar-cost averaging helps mitigate timing risk, while regular portfolio rebalancing maintains desired risk levels. Maintaining adequate emergency funds prevents forced selling during market downturns, and thoughtful diversification protects against sector-specific risks. Mental preparation represents perhaps the most crucial element of successful hodling. Investors must develop a deep understanding of market volatility and set realistic expectations for both gains and losses. Building strong conviction through education and research helps maintain positions during challenging market conditions. The development of patience as a skill rather than just a virtue enables hodlers to resist the temptation of emotional trading decisions. Security breaches often result from preventable errors in private key management and storage practices. The online storage of private keys creates unnecessary vulnerability, while sharing seed phrases compromises the fundamental security of holdings. The use of potentially compromised devices for cryptocurrency transactions and inadequate backup procedures can lead to catastrophic losses. Weak password practices further expose holdings to unnecessary risk. Emotional decision-making presents another significant threat to successful hodling. Panic selling during market crashes and FOMO buying during rallies directly contradict the hodling philosophy. Over-leveraging positions out of greed can force liquidation during market volatility. Poor risk management and obsessive price monitoring often lead to emotional rather than rational decisions. Technical mistakes can severely impact hodling success despite strong strategic intentions. Choosing inappropriate wallet solutions, mismanaging private keys, and making errors in transaction execution can all result in significant losses. Inadequate understanding of network fees and platform security considerations can lead to unnecessary costs and risks. Institutional adoption continues to validate the hodling strategy as major corporations add Bitcoin to their treasury reserves. The development of cryptocurrency ETFs, growing interest from pension funds, and increasing participation from insurance companies signal broader acceptance of long-term cryptocurrency holding as a legitimate investment strategy. The integration of cryptocurrency services by traditional banking institutions further legitimizes this approach. Technological evolution continues to enhance the HODLing experience through improved custody solutions and security tools. Enhanced user interfaces make long-term holding more accessible to newcomers, while integration with traditional finance creates new opportunities for portfolio management. The development of sophisticated financial products provides hodlers with additional options for managing their positions while maintaining long-term exposure. Effective portfolio management requires careful consideration of asset allocation across different cryptocurrencies and traditional investments. A well-thought-out diversification strategy protects against project-specific risks while maintaining exposure to the sector's growth potential. Careful position sizing prevents overexposure to market volatility, while clearly defined entry and exit strategies provide a framework for long-term success. Emergency planning proves essential for long-term holders, requiring the development of comprehensive backup procedures and security protocols. Clear documentation of access procedures ensures that holdings remain accessible when needed, while recovery strategies prepare for potential security breaches or technical failures. Estate planning considerations ensure that crypto assets remain accessible to designated beneficiaries. The superiority of hodling over traditional Wall Street approaches has been consistently demonstrated through both bull and bear markets. This strategy's success derives from its elimination of timing risk, reduction of emotional decision-making, minimization of fees and taxes, and capture of full market upside. The simplicity and effectiveness of hodling stand in stark contrast to the complexity and uncertainty of active trading approaches. The future of hodling appears increasingly bright as technological improvements enhance security and accessibility, while institutional adoption validates the strategy. As the cryptocurrency ecosystem continues to evolve, hodlers stand to benefit from both appreciation in their holdings and the development of additional tools and services that make long-term holding increasingly profitable and secure.